Yo, yo, yo. We'll start in about 20 minutes. For now, enjoy the news squawk. United States Redbook Index, Y, increased to 5.6% in October 11th from previous 5.4%.
Bank of Canada. The case for a 50 basis point rate cut firms up after a drop in CPI.
Sige, espadas mo. 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 Sige, espadas mo.
S&P 500, NASDAQ 100, Wall Street indexes. Eye further gains as earnings filter through.
Okay. Happy day. It's a Tuesday. One of the greatest trading days of the entire week. It's even better than yesterday, since most of the markets were closed yesterday. The bond market was closed. Canada was closed. Ingram Micro sets IPO terms which could value the IT company at $5.4 billion. How did I say that without moving my lips? Oh my God. So just so you know, there's a new free service I've launched. I paid many thousands of dollars. This is what I do for a hobby. I burn money. I burn money. But the benefit to you is it's for your benefit. Okay? It's your benefit. So anyway, I have a server, which costs me a lot of money to run. And then on top of that, I have software, and I have to pay for a lot of APIs because we have voices, and that's artificial intelligence. So I have to pay that service, and we're training voices. But what I created for you is a service where I run a news squawk 24 hours a day, 7 days a week. We have personalities, we'll say, on various news desks around the world, from Australia to Hong Kong and Singapore to London to the United States and Canada. And this news team, this crack news team, is bringing in thousands of headlines a week, somewhere between 2,000 and 3,000 news headlines per week, all focused specifically on trading and investing, very hyper-focused. Some of it is even doing technical analysis. And we're offering all of this for free. Some services are similar and they cost hundreds and hundreds and hundreds of dollars a month. I'm doing it for free. So we have a calendar on the left, so you can see, if I go back and zoom in, you can see we had New York Empire come out, right? A bad number. Okay, Canadian CPI. Euro US dollar price prediction bleeds lower towards first target for reversal pattern. Wow, there's a prediction. Euro dollar is going to drop toward a reversal pattern. I just said that. So anyway, we got the news calendar. We have the news flow. And, oh my God, we have trading patterns. And all of this is updating live. 24 hours a day, 7 days a week. And it's free. It wasn't free to make, but it's free to you. So if you could swing on by and help me get YouTube to promote it as quality content that is actually valuable to traders and investors, I'd appreciate it. And the best thing to do is, well, open it up and just run it for hours in the background, so you get updated as news comes in. Next thing you could do for me is click the thumbs up. I think that's supposed to be good for the algo. But the true hack that I'd like to show you is on my browser, I have an extension that's called Video Pop Out. And now I can pop the video out. It'll play the audio. So now I'm listening to the news as I'm trading. And I can change my charts. And it'll just float there reading the news for me. And it doesn't bother you. It doesn't babble like I do. It'll just read the headlines to you. And yes, that is my voice. So while training the models, I decided to see if I can clone myself. I think this is pretty good. So during New York, I will actually be speaking to you because you're my sweet baby. Crude oil sees correction halt after comments from Israel's Minister of Defense against Iran. See, it's not too intrusive though, right? It's not too intrusive. Ridiculous, huh? I mean, seriously, can I get a whoop whoop? No whoop whoop? Really? No whoop whoop? Yeah, thank you. Yeah. I'm fishing for a whoop whoop. A little something something. Dude, so anyways, so I'm with you. I'm with you. Gold edges higher in line with broader uptrend. See, it's not too intrusive, but it's informative, huh? Like, dude, seriously. All right, so I just spoke about gold, so I might as well continue to speak about gold. Okay. We're looking at the next leg here. Okay, is what I'm thinking. And we started way back here in July. You should still be long gold since July. Okay, and this is all based on traders.com, helping you do all your economic research, quantitative analysis. This is when, like the back tester, if you go into the back tester, that's when it turned bullish and said, get ready to buy gold. July 22nd was the day. And it took about a week to get going, and then retested, and then it's just Oscar Mike. And now we just had this 10 days of down, which is perfectly fine if you're a bull, and now we're trying to buy it back up. Yeah, you're days late, but I suppose if you're reactionary, but I don't know. Okay, cool, right? You see how this is neat? Yeah, very neat. Okay, it's very, very neat. So you're going to need traders.com so you can make good decisions on trading and investing, both technically and fundamentally. You're going to need some performance coaching. Today on the coaching schedule, so I already did a live stream earlier today. Then we have Forex.Today, so we're here now. And then today at 11:30, price action trading with David Pegler, your performance coach for the day. After that, if you're on the news trading team or the pro trading team, scalping market opens with Jessica. And then later today after that, I'm doing the week on the street where we download and read the actual economic reports. This is just later today. So I did an hour already. Now I'm going to do an hour now. Then David's going to do an hour. Jessica does an hour. And then I do probably 2 hours here. Just today alone is probably 7 hours of performance coaching. TRADARS is that amazing.
U.S. stock futures flat ahead of the open.
All right, I'm going to pause my team here, my news team. By the way, this is streaming and broadcasting in 1080p, even if it's a little blurry here. It probably takes a few seconds to set. But I'm going to pause the team. But I just want to show you that that's how you do it. So while you're trading, throughout your trading day, you can just have that floating in the corner, reading the news to you. It's like a heads-up display. Okay, so fundamentals, technicals, performance coaching. This is what you need. You need this. I'm telling you. You need traders.com. And then you need an execution partner. Okay. There are many that you can choose, but this one is mine. There are two business models for brokers. Okay. One is booking in a dark pool. And the only way that that makes money for a broker is that everybody in the dark pool eventually goes broke. See, it's a dark pool because the money never actually leaves the broker. So eventually you blow up your trading account and all the money stays at the broker. So you put in $5,000, you blow up your account, the broker keeps the $5,000. It never left the broker. You're like, but I placed trades. Yeah, that's true. Who offsetted your trade? Goldman Sachs? Someone out in the interbanking system? No, some other trader in the dark pool who also will eventually blow up their trading account. So the money never leaves the broker. It just goes round and round and round. People just lose. Eventually everybody loses, and they just go out and they get more clients and they get more clients, and eventually everybody loses. They might give you some crappy education, some shitty alert service that just propels all of this. They get paid when you lose money. I don't like that. It just rubs me the wrong way. So instead, I partner with an ECN, which uses straight through processing, so there's no dark pool. So at Trader's Way, when you click sell, that sell order goes into a pool of liquidity providers. And the person on the other side of your trade, or the entity on the other side of your trade, could be someone in Malaysia. It could be Goldman Sachs in New York City. It could be JP Morgan in Hong Kong. It could be a Russian oligarch. No, probably not. But it's just out there, literally out in the interbanking system. And you're like, well, that's what I want. Isn't that how it's supposed to work? That is how it's supposed to work. But most retail Forex brokers are not like that. So if it rubs you the wrong way, like it rubs me the wrong way, then you should just look for an ECN, try tradersway.com, give them an opportunity to earn your loyalty and respect, like they earned mine. And if they pass your due diligence, give them a shot. Okay? Cool. That's it. Intelligence to formulate a strategy and to have a coach and a team on your side. So like, if you join traders.com, I'm your economist. Huh? I got the Harvard mug, and that is a real Harvard mug. And it's actually sitting there. I got the Harvard gold ring right there. Huh? That's a real gold ring with real gold. Yeah. Got the gate on the one side, really nice. Look at that, huh? So anyways, I work for you. I'm your econ bitch, and I work on your team. Cool. So let's get on with it. So let's see what's on your mind. Okay, what are you trading today? Most people are risk neutral. But it's risk on here. Yeah, well, see, I already did a fundamentals meeting. So everybody that's a pro member or member of my fundamentals team, we already did this today. We already looked at this. This is ancient history for those that are in the know. Let it load. Loading. Come on, it's loading. Should I kick it? All right, let me give it a little kick. I'll pop the scatter plot and go back to gauges. A little better. There we go. So it's a bit of a mess right now. So let me ask you a question, and even though it's rhetorical, I would like you to answer. Okay? Should you bet big today in the markets? Yes or no? I know it's a rhetorical question, but when you quantitatively analyze these constituencies, is this an opportunity for you to bet big today? Please answer. This is good. You're talking to your own psyche. Please answer. I'd love it if we had dozens of answers. Now, while you're answering and contemplating, I'd like to point out that 99% of traders in the market right now do not have this level of detail. They just don't. Okay? Eric BNLL, well, hell. Right, Eric B? Do you know that line, Eric? Beat is for Eric BNLL, well, hell. Rock is for Anthrax, still we can rock bells. Oh my God. Dude. Yeah, it's Public Enemy from the early 90s. And I think Eric B was a writer in one of the rap magazines. Yeah. Anyway, so you're famous. Is that right? I can't help it, Eric. I probably haven't seen you in a year. And you're like, every time you pop in, I'm like, I can't help it, man. I can't help it. Okay. So anyways, being part of traders.com is important because you can see what everybody else is doing. Options traders, let's look at like week over week. Options traders, bearish. Okay. Long-term treasuries, flat. 2-year treasuries, okay. Yields are up, which means they're bearish. Okay, dollar index up, they're bearish. Volatility is down, so everybody's bearish, but nobody's trading. Well, volatility low, that's good. Gold is up. I count that as bad because I count that as safe haven flows. That'll likely change in the future. Next year I won't score it that way, but this year I'm still scoring it this way. I see some safe haven flows. So again, what does that mean? Okay, people are making money if the stock market falls when trading options. The entire options market will do better if the stock market falls. That doesn't sound good. Okay, treasuries, really we can call this maybe flat on both sides. Okay, whatever. So money's not going in, money's not coming out. So none of that's good. Dollar is strong. That's not good. Volatility is significantly down, but the thing is, I don't think it's followed by money into risk on. Maybe it is, but I think vol in this case, I mean, it's good to have lower volatility, but is it because nobody's trading? I don't know. Okay. Buying gold could be a safe haven, like buying dollar could be a safe haven, like buying puts instead of calls could be a safe haven. Right? A lot of this can be interpreted negatively. Week over week, nothing's happened with the yens. Is that good or bad? Dude, really? Nothing has happened. Well, there's been up and down, but that's not necessarily good. And S&P 500 is up. Great. So S&P 500 is up, but there are more puts than calls. Money is not really doing anything on treasuries, but dollar is strong. And there's safe haven flow, but I'm like, dude, this is gobbledygoo. Okay, like stock market's going up, but on its own. Is it a house of cards? I don't know. Where is it coming from? Okay. Where is it coming from? Well, you got to look at the longer term, not just the week. Where is the money that's in the stock market coming from? Is it foreigners? Well, let's look at the dollar index. Month over month, yeah, 2% move in dollar index. So it could be some foreigners. Does it explain the entire move of a 4% rally in the S&P 500? Well, yields on the treasuries are up significantly. Okay? Significantly. Money has come out of treasuries. Where did it go? Did it go to the S&P 500? Yeah, maybe. Maybe. Okay, maybe. Okay, maybe. How strong is the dollar? So we want to look at this. So yeah, so 2%. Okay, so again, for the dollar to go up, foreigners need to buy it. It's their flight to safety. So yeah, it went up 2%, though is not crazy for a month. This is 30 days over 30 days, right? So for rolling 30 days, that's not that big of a deal. But usually when the stock market is up, this is down. So this is up and this is up. But this is up more than that. So Americans must be moving money around to get this to go up. Meanwhile, everything else doesn't make a lot of sense. So what's going on here? You have to be able to read the numbers. Money is coming out of 2-year and 10-year treasuries. So we're looking at these numbers now. Money is coming out of these assets. And when money comes out of the asset, the yield goes up because now the government has to entice you to lend them money. And money is coming out. So they're like, no. We'll pay you more. Just leave your money. Lend us some money. So yields are up significantly. That means people took money out of the market and looks like they put it in the stock market. Okay? Yeah. Creating some vol, which means it's up and down, up and down. That's not good. Okay? And so what would create this exodus? Do you think it has anything to do with the Fed? Oops. Do you think it has anything to do with the Fed and Fed cuts? Also, if you look at the yield of the 2-year, it's lower than the 10-year. We went years and years and years with an inverted yield curve. It's not inverted anymore. How neat is that, right? So you're like, let's visualize that 2-year. We'll go to the hot money page. And things were quite terrible here. Notice this period. Okay? Bad. That's the period where dollar got strong. Yeah. So now maybe we're moving towards an improvement. This is still bad. Interest rates, aka yields, have skyrocketed since the Fed meeting, basically, right? Right, let's get that. 18th. Okay, so this was the Fed meeting. Okay, this whole area, we had the Fed meeting and Fed cut, and all of a sudden people are like, uh-oh. Okay, they cut, and kind of the opposite has happened because we realized, well, really what they said is the Fed's not going to cut by 50 basis points. He said it at the press conference, and people still are debating whether that actually happened. I don't know. I saw it live. But then at some point, I think, in my humble opinion, the market will say, okay, yeah, the Fed's going to slow down, but the Fed's going to cut. The Fed will cut. The Fed's going to cut. Don't worry about that. The Fed's going to cut. And so now but the rate of change is going to be significantly slower. And so I think this will head back down, or at least that's what I'm praying for. And usually this falling, so now if we go to this period, when you see a period like this, you have a green score and the S&P 500 typically would go up in a situation like that. Okay? But now we're in this situation here, and quantitatively, you would expect the stock market to be falling. But as you know, the stock market's been rising, but the dollar's been strong. This strengthens the dollar, but one of these things is wrong. Well, in January, I said the stock market would go up starting in the third week of October. And not just that, but like the dollar to weaken, I think more specifically, as a Forex trader. Dollar weakening starting the third week of October. So this going up in the beginning of October is not actually a shock. That's actually what I said in January. But now in the next week or two, I want to see dollar weakness. Is it going to give me anything here? Dollar weakness. Do I have a euro? No. Interesting. I actually, am I missing Dixie? Is Dixie here? Dollar, Treasury, oil. Do I have a Dixie? Oops. Interesting. I'll see if I can add that. I expected back in January that October would be bad, the dollar would be strong. But somewhere near the end of October, that would change, things would improve, we would be selling dollar, and we'd be selling dollar for many, many, many weeks. And so there's no doubt we got this right. So the question is, will this downward move that we're in now back toward the 8-day average, will it cross below and continue falling to previous levels and maybe even lower? I don't expect much lower because there's only, right, when you study Newtonian physics and then correlate that to treasury prices or yields, there's really only so far this would fall before it breaks other things. Now, I've been wrong before on this thought, but I still think, generally speaking, I'm correct. So David Pigler might remember back in the 2008 crisis, I did a speech to all FX boot campers about how it's impossible for the 10-year T-note to drop below 2%. I said, based on Newtonian physics, it's impossible. Because if it dropped below 2%, well, short-term stuff like 3-month yields would actually go negative. And we all know negative yields are impossible. Well, they hadn't happened up to then, but oh my God. Negative yields, WTF, what the... So anyways, that hadn't happened before. It's just strange, huh? Negative interest rates. Zero interest rate policy. Just didn't make sense. But nonetheless, I think this could drop back down to, 3.5, let's say. Where we were before, 3.5. But is it going to drop to 2? Not for a very long time, I think. We would probably have to have an economic crisis and the Fed slashing interest rates all the way back to 0. And I think that is very, 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 very far-fetched right now. I think you got other things to worry about that are more important, like maybe being struck by lightning. But it's not impossible, but it's not sort of in the cards right now. Okay. So there we are. That's how you're supposed to look at yields and all that kind of stuff. Very cool, right? Abdul says seasonally S&P 500 is not down. That is correct. If you only study annual seasonality. If you're only studying annual cycles, that is true. Yeah. Now, I study a little more than that, but okay. So what we're looking at here is you should be cautious on gold now. Okay? You should be cautious. You should have been cautious on gold since it double topped at 27, which is the first of the month. And that's kind of part, remember, if I said in January that October would bring dollar strength, gold is priced in dollars, so gold falling could be explained by gold pricing in dollars, and that means dollar is strong. Okay. The other thing I said is it would then somewhere near the end of October go the opposite direction and dollar would weaken and maybe gold goes up again. So the opportunity, if you're going to do this technically, is you might see this in the near future. If you're a gold bull, you might want to look at this as a possible increase. So the line is the price of gold in dollars. Okay? These bars are the scores that traders.com has given gold based on quantitative analysis of global macroeconomics. Okay? Don't buy. Buyable. Okay? And you're like, it's just responding to price. That is actually not true. Very often it leads price. Okay? You see the scores here? Like, for example, look at the score. We went from a 3 to a 0 at the top. Okay? And then we continued this way. So you can see our scoring is suggesting a down is in play even when it was going up. Oops, it's supposed to be green. Even when it was going up, the score was going down. And then what eventually happened, right? And then suddenly the score is kind of improving and maybe will turn this way. I don't know if that's true, but that is what I'm looking for as a potential buyer in gold. Maybe not today, but maybe today. Maybe it's tomorrow. Maybe it's next week. That's the difference of hindsight and planning ahead. Okay? Oh, man, I am struggling with the drawing tool today. Come on. Okay? There we go. So if that's my hypotheses, then I could be ready, willing, and able. And when I see a pullback to this role reversal and maybe a rise from -4 to -3 to -2 to maybe even positive, that's the green light because it's looking at something like 13 variables to decide the score of positive or negative. So 13 different things to compete with. So if I can get some clarity. So part of this is interest rates, labor market, inflation, GDP, technical trends, seasonality, retail positioning, institutional positioning. So at the very least, it's 1, 2, 3, 4, 5, 6, 7, 8 variables, but actually there's a few more, to decide whether you should be a buyer of this asset or a seller of this asset. And then you can go to your charts. Or you can say it's bearish now, but you're thinking about being a bull soon if the score improves from -3 to maybe something positive. So you can say, well, I wonder if gold is going to turn bullish anytime soon. So you go to commodities, and if you want to filter it out, okay? If you want to filter only gold, so you can like get rid of Brent, get rid of WTI, get rid of silver and only focus on gold. You can save that. And now you're like, I want to be a bull, but it's not bullish. So you have traders like, hey, traders, look at all the different time frames and look for all the different patterns and tell me if there's an opportunity to buy. It's good logic, isn't it? Yeah, it's great logic. Okay. Right now we know fundamentally the score is negative. What about this pattern on the 30-minute? It's the same pattern, so let's do the higher time frame. It came out about an hour ago. 3-drive Fibonacci pattern. Okay? Let me ask you using colors. Is it pink or is it green? Pink or green, please answer. And if you don't know, just type in a question mark. But do something. Say something, I'm giving up on you. I swallowed my pride. It's the difference of knowing how to trade a pattern and not knowing how to trade a pattern. All right, so dozens and dozens and dozens of you have no answer, no response. No pink, no green, no question mark, no nothing. Why? Are you afraid? Oh, you're driving? Is that it? You're driving to your day job? What's going on? It's frightening to me, actually. All right, so I guess vulnerability is something you're struggling with. Okay. Right? You don't want to look stupid in front of YouTube people? Dude, wait until you try to raise money from investors. Oh my God. But anyways, if you don't know how to trade patterns, download right there. It's free. Okay. Okay, you ready? So what's happening here are fib wars. That's what's happening on a higher time frame. This pattern, okay, says down in a blaze of glory. Now, I don't know if I switched colors, and if I did that, I apologize. So let me just do this in black. Okay, lower low, pull back on a shorter time frame, and then down on a higher time frame. So it really will probably do something like this. And the way that you want to look at it is probably more like a pullback like that. And then at some point, it's going to rotate this way. Okay. To put even more emphasis on it. Higher high, big low, lower high, lower low, lower high, lower low. And at some point, traders will just say, oh, yeah, it's happening, right? So it'll just do this. And that'll be the pattern tomorrow. But you have to understand that that's what's setting up. So you could just look at that and say, all right, you could take it down, but I'd probably wait for the lower high. Cool. Or the consolidation, catch a breakout tomorrow. Or if you're a bull, and wasn't that the plan? Wasn't that the plan? We want to be a bull longer term. Okay, well, we're going to need to let this do its thing. Then we need to observe something like a double bottom, higher high, higher low, and we need to start building that. Okay. I'm struggling here. Okay. So this is useful because we're in this move here, and then there's probably going to be a move like this, and then at some point there'll be a move like this. And okay, we probably, like you almost have to, required by law, buy here if you're a bull. Bullish law. Okay. Well, they end up being the same thing. Like, how can you have, I mean, yes and no. Like, as far as order flows in the COT, it tells you, is this going up because bears are exiting, or is it going up because bulls are entering? But eventually, a trend will turn into both. You'll eventually get both. Okay? So I think what's happening is we're taking out some of the bears, and then more bears are going to get taken out here, and then bulls are going to start entering here, and in the future they'll enter here. And so this is, you're ready, willing, and able. This one, you're actually a buyer. This one, you're going to be a buyer. The future one, you're going to be a buyer. Yeah. And so as a bull, remember, we started all of this. You might be a bull fundamentally using things like seasonality, but also your daily chart. This isn't a daily chart. This isn't a daily chart. And we also looked at our score. It's still fundamentally bearish, but we know in 2 days that could change. So you're trying to put all this into context where you're like, okay, there's some exhaustion. There might be another bit of a low. And then at some point, we want to get on this move. There could be some threat along the way. Okay, let me do that to add layers and layers to the onion, because some of you already might be on this clue train. Okay. Okay. Why do I draw this? Because the stuff up here might not happen that easily. This was the idea of, we were in a downtrend, now we could be in an uptrend. But you can get one more wave down, right? You can get this down this way and then up. Why do I say that? Does anyone know? Let's put the price action together. Okay, up, down, up, down. That's what that pattern says. Okay, then down. Okay, then up, then down, then up. Does anybody know how to describe that? Okay, we saw it on Microsoft yesterday. Yeah, we saw it in Microsoft yesterday, right? Cool, right? So TRADARS yesterday, when we were way down here at 114, so entry 120.88, that's actually where we are now, which is kind of interesting. But that's the break price. The price on the signal was about 114. Okay, so probably this one, 113. So what it's saying is up, down, and long, long and gone. So we're going to use 113 as the signal number of when that came out. And that's this price right here. Okay. And, okay, so we had the down, the dip, the high, the dip. This is when you got the signal. And then up and as high as 123.30. So up another $3. Okay, obviously you can get better charts than that, but and we're right back to where we were. But anyways, so, you know, if you're trading stock, that's important. So Peter Ward did performance coaching yesterday at traders.com regarding to, you know, for those that are interested in trading E-mini futures, basically the S&P 500, day trading the S&P 500. So I hope you attended that. Today we have price action with David Pegler. That's at 11:30, so about 90 minutes from now. Okay, and then Jessica's doing scalping, and then I'm doing fundamentals later today. There's something like 7 hours of performance coaching at traders.com today. That, I mean, think of it. Got some cool stuff lined up? Oh, clickbait. Yeah, I remember that time I posted a video of FX from FX Bootcamp back, I don't know, 100 years ago. And I'm like, naked trading, so easy. It's so long ago. Oh, yeah. Naked trading so easy, Britney Spears can do it. And I'm like, naked, Britney Spears. I'm going to get millions of views. Yeah. Never happened, by the way. But yeah, so we did some naked trading. And people are like, who's Britney Spears? That grandma? Yeah. Yeah, the other joke I used to have all the time was, you know, a J-Lo. People are like, what's a J-Lo? And I'm like, a big wide bottom, and everybody would laugh. Now they're like, who? J-Lo, the grandma? I don't get it. What do you mean big wide bottom? I don't get it. Yeah, shows you I need new jokes. Yeah, need new jokes. So anyway, so that's how you kind of thread the needle here. How we went through and looked at gold. And another way to look at it is this way, where you're like maybe some down before some up. And you can see we're kind of in that process. So you can note that mentally, emotionally, however you want to do it. And wait for a good opportunity. Is this a great one? I wouldn't say so. Go to that 30-minute chart. Is it a good one? It's tradable. I mean, look, you should know how to trade the moving averages. You should be able to see my price action pivot points. You could probably catch a roll reversal. So could you skippity scalp? Yeah. I would just say do what you're going to do. But because of the analysis we've already done on traders.com is that it's uncertain, it's unclear. This could be a one-off. It could be a mirage. It's happening, but it's not happening. So just don't bet the farm. But as David's saying, like talk the book, well, trade your book. What does that mean? Well, are you a bull on gold or not? I just showed you 19 reasons why I'm a bull on gold, except it's not bullish right now. Quantitatively, fundamentally, even technically, but it's not impossible. So what do bulls do? They buy dips after higher highs. Look at the price action pivot points. Does that indicate a higher high to you? Yeah. So you buy a dip on a roll reversal and you get into a trade, you drop your stop, and praying never hurts. So your entry should be somewhere on the roll reversal. Your stop should be somewhere below the lowest low. And now you're on your hands and knees praying. And trading never gets better than that. That's peak performance. You never know. You never, ever, ever know. There's a point where most amateurs, including myself, have gone through and say, well, I'm sick of losing, so I'm going to look for certainty. I am going to only trade when I have 19 different indicators that all agree. So there are two things that you probably learned like I did. One, you never get all 19 to agree. Or two, when all 19 actually do agree, the trade's already happened and you buy at the top or you sell at the bottom and you lose because you couldn't make a frickin' decision. So at one point I got better as a trader just flipping a coin. Flip. All right, the next 3 months I'm a bull. Done. And so what do bulls do? Buy higher lows. Is this a higher low? Yeah, it could be. Boom. Take a shot. Drop a stop. Take a walk. If it's a lower low, do I buy it? No. You see how much easier? It'll never be easy. You're never going to get certainty. But once you make a decision, no matter how you make your decision, once you make the decision, now you actually have a strategy. Buy higher lows. So you can go through your whole life. Is this a higher low? No. Is this a higher low? No. Is this a higher low? Yes, buy it. Okay. Double bottom. Is that buyable? Yeah. Okay. Higher high. Is this a higher low? Yeah, buy it. Higher high. Is this a higher low? Yeah, buy it. Higher high. Higher low. Is this a higher low? Yes, buy it. Higher high. 100% pullback. Don't buy it. Exit. Lower low. Thank God you exited. Higher high. Higher. Is this a higher low? Yes, buy it. If it makes a higher high, what are you going to do next? Buy a higher low. If it hits the double top and collapses, what do? Get out. If it makes lower lows, take a walk. Now you're waiting for double bottoms, inverse head and shoulders, whatever you call an inverse Gartley. What are those, bats, butterflies? I don't know. Who cares? Who freaking cares? You buy a higher low, bro. Can't get easier than that. But for some reason, when we're new, we like to just trade all over the place. Like a chicken with its head cut off, we're running around making a bloody mess of everything. Flipping a coin will radically improve your trading. The penny you invest in the flip will be the best money you've ever invested into trading and investing. A penny can make a difference. Heads or tails, which just leads you to bullish or bearish, just gives you a bias. The cool thing about trading and investing, it doesn't even matter if you're right. Trading is a symbiotic relationship. It's a beautiful dance between bulls and bears. Bulls will lead for a while. Bears will lead for a while. When your team is leading, you'll make more money. Sometimes when the other team is leading, you'll get opportunities that they just won't run. So you make a little bit of money in certain market situations. So if you're a bull, but the market is actually bearish, you'll get some opportunities here and there, but they're just not going to run. So you make a little bit of money, or you don't trade much at all. But then when the market changes and the market becomes bullish, you're already a bull, you'll buy dips and let it run and you'll do fabulous. And then you'll go through a boring period, and then you'll do fabulous. And then you'll go through a boring period, and all of a sudden you realize it's a dance. Left, right, kick, right? Left, right, back, kick, left, right, back, kick, left, right. I'm doing that wrong. Sorry. Left, right, back, kick, left, right, back, kick. As long as you do that, you're not going to step on any toes and you're not going to get hurt. But you have to understand the symbiotic, beautiful dance between the bulls and the bears. You don't have to be right. You just have to be a good trader. You have to have patience. You have to have discipline. You have to have malice aforethought. You actually have a reason to be a bull or a bear. But if you don't have the cognitive ability, or you can't afford traders.com, then pull out a penny and radically change the way you trade, and you'll be fine. It'll work out just fine. Peace on earth. May the pips be with you. May our profits be above average. Have an awesome day. I am going over to the Squawk. I'm going over to the Squawk. The Squawk. Let me get the link for you because I'm still running it over here. And this is where, right, you'll get updated patterns, live news flow, calendar, all updated beautifully, totally free. And please click the thumbs up button. Please hang out and stay a while. The longer you watch, the more you're supporting the group. There's no ads or anything. It's just that your average stream time interests YouTube. And then, like I said, you can search browser extensions and find like a YouTube video pop out. Oops, apparently I didn't do it, or maybe I won't do it because I already had it done. I won't do it again for a second time. But anyways, you can pop that out and float the player while you're trading. It's just floating there. But for those who are actually on the live stream, we can chat, right? So I'm going over there. Please join me. I'll be there for hours. It's something you can listen to the headlines while you're trading. It's not intrusive. It doesn't waste your time. There's no psychobabble. It's good. I'm telling you, it's actually quite good. You'll love it. And the price is right. Free. So I'll see you soon. Thank you, Forex.Today. Thanks, Traders Way. Thank you, Traders.com. Thank you to you. Thank you, everybody. I'll see you again soon. Don't forget David Pegler in 90 minutes, Jessica in 2 hours, me in 6 hours, doing fundamentals. Busy day at traders.com. Cheers.